Okay, it's time for Word on the Street, where we check in with our panelists, find out the stories that they're watching. Brian, you're following President Trump's recent comments about Jay Powell and the Federal Reserve.
Yeah, so he had an interview with ABC today where he said, quote, I want to read this verbatim, if he, referring to Powell, didn't do tightening, if he did nothing or perhaps even loosen, we would be, in my opinion, just an opinion, 10,000 points higher than already a very high number. I assume he's talking about the Dow. I hope he's not talking about the S&P 500, but if that were to be the case, that means that he thinks if the Fed had looser monetary policy, that we would be at around 36,000. As we know, the president does pay very close attention to the stock market, probably measures the success of his economic policies based on where the stock market is trading. It's not unusual for presidents to comment on the stock market. Remember that in March of 2009, then President Obama suggested buying stocks. Actually, if you did do so at that time, you would have made quite a lot of money. But it's interesting because obviously the president is continuing to pressure on the Fed to cut rates ahead of that critical meeting next Wednesday. And Kevin, I don't know if you agree that we would be 10,000 points higher, but I don't know. I think that's very interesting.
I mean, and of course, the president's not the only one pressuring the Fed. The market is pressuring the Fed in a pretty big way, and that's something you've been watching.
Yeah, I think we all have to put this in perspective. The Dow, the S&P, even international developed markets are up double digits thus far this year. 10, 20 years ago, that was a good year for the stock market. We're only in June. So I would argue that the pullback we saw in May was more likely brought on by fears that now we have to stop worrying about U.S. and China again and the potential for an additional round of tariffs and the impact that might have on the global economy. With the Fed doing nothing for the next 2 years, not raising interest rates, slowing down their balance sheet reduction plans, with the corporate tax cuts still in place, the more lax regulatory environment, that should be a pretty constructive environment for stocks. Maybe not 10,000 points higher, but certainly a constructive environment for stocks.
All right, we shall see. Kevin, Mahn, great to have some time with you today.
My
Appreciate
pleasure.
it. Have a great weekend. Brian Cheung's going to stick around with us.